Hi everyone, so welcome to Investing for Value. So today I'm going to talk about Scorpio Tankers Quarter 1 report. The revenue for this quarter was 254 million and that was up from 195 million a year ago. Expenses stayed relatively consistent and it did translate very well to the operating income. It jumped 50% from 60 million a year ago to 91 million this year. In terms of financial expenses, they did drop 4 million from 48 million to 44 million, though this is still a very large figure in the scheme of things. It did translate very well to a net income of 46 million, up 3 times from 14 million. So in the scheme of things, it is an increase, though I'm relatively concerned how large this financial expense is. I don't think I see many oil tanker stocks with finance expense this high, but if they continue to bring in good money, then the financial expense isn't too bad. In terms of assets, as cash did drop from 202 million to 119 million. Account receivable increased from 78 million to 148 million. Everything stayed relatively similar, so I don't think there's much of a concern on the asset side of things. Current liabilities did increase from 235 million to 263 million, so this year they do have some debt that's due, so I don't imagine that they would actually have that much room to pay dividends with this money that they're going to be getting. At least not too much, because with 263 million, either they're going to refinance it or they're going to be able to pay it down, but it means they're not going to be able to return the money back to shareholders. At least it doesn't seem wise to when you have so much debt. So I imagine that current debt came from this long-term debt because it dropped from 999 million to 968 million. And also the finance lease liability dropped from 1.19 billion and it dropped by 30 million to 1.165 billion. So fairly large figure when you look at that. And the lease liability went from 506 million to 584 million. So on the debt side of things, this company does have an enormous amount of debt. As we can see here, this is how payments are going to be done, and there are going to be quite a few payments. So we're looking at about 3.2 billion in debt that they're going to have to pay off over time. So you definitely hope that they're going to get some pretty good increases, which they have talked about. So the current rates that they've been receiving in the first quarter, it was 22,500 for the Handymax, 20,900 for the MR, 20,000 for the LR1, and 26,800 for the LR2. And this was for the first quarter. And the second quarter, as I've talked about here, these are the rates that they've been receiving, and some of them are fairly impressive. The only one that wasn't impressive was the Handymax, dropping by 2,500 to 20,000. Whereas the MR went from 20,900 to 25,000, so a good 4,000 increase. The LR1 went from 20,200 to 41,000, so just over 20,000 increase per day, which is fairly good when you consider that these increased rates basically translates right to the bottom line, which is fairly good. And you have the LR2, which is the biggest increase from 26,800 to 53,000. So really impressive when it comes to these. So for the LR2, they have about 42 of these. So when you think about the additional increase, they have so many of these tiny ships that the increase is really going to translate to the bottom line. I did a rough calculation, and they could be looking at an additional, increase in revenue of about $150 million, which would be pretty impressive. So even if it's not 150 million, even if it's just 100 million, they would be looking at 350 million in revenue, and when it translates right to the bottom line, we'd be pretty pleased and would be looking at close to 150 million in net income, if not just a little bit less than that, which I imagine they're going to use to pay down debt, maybe a slight increase in dividends if possible. So the recent dividend that they've just announced for quarter one was 10 cents. So 10 cents in the scheme of things, when you consider their share price is $21.25, so it looks to be changing once the market opens. In the scheme of things, it's not a very large dividend because Yahoo kind of imagines if they do pay 10 cents every quarter for the next 12 months, it's only a 1.83% return, which is not a lot when you consider DHT is paying about 5% in dividends for just one quarter. It's kind of amazing that this company isn't paying a huge dividend, so you can kind of see with the debt that they can't really pay a huge dividend. So when you invest in this company, you're kind of looking for the share price growth, whereas a company like DHT, for comparison, they're paying quite a large dividend, even just for one quarter. Is more than what they would pay in a 12-month basis, actually 3 times more than what they would pay in a 12-month basis. So you would not be investing in Scorpio Tankers for the dividends, even with the increase in the current situation with all these very nice rates. You would still be just buying Scorpio Tankers very much for the increase in the share price. Um, so I think quarter two looks very, very impressive, and it kind of makes sense because when the rates were increasing, it increased for all the very large ships. But recently we've been seeing some large increases for the smaller ships, and this is very, very good evidence because we're basically seeing the rates double for LR2 and LR1, and MR is also increasing a little bit. And it's just a handy max that's just been a bit disappointing, and they've locked in quite a lot of the available days of about 60%. So it's looking like a very, very good quarter that's going to be coming up for Scorpio Tankers. So that's all I've got to say about the current quarter. If you do have any questions, post below, or if you want to share your perspective, that's always welcome. I always love to balance other people's perspectives with my own. And until then, good luck investing, everyone,